What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TWTR for Twitter Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just yesterday and the possibility for this to ultimately pan out as a massive bear flag on the daily, and we even discussed this, a smaller 30-minute bear flag panning out. And what do you know? It certainly broke down on today's session. We had that aggressive entry underneath the support trend line, and we came right into that sort of floor we pointed out around $40.77. So as of right now, yes, it does look like the start of another bearish breakdown because we are at a critical area of horizontal support and we're coming off of 3 days sold. I wouldn't be surprised if there's a little bit of a bounce. If it does happen, just ensure that we remain underneath the 38.2 from today's session, and that's going to be around 41.40. If we do something like this, that's fine. It's not the end of the world. We're just looking at a lower high. Reattempt to this low here should ultimately continue the breakdown, and we know that that next daily level to watch out for is way down there at 36.33. So the chart does look fairly bearish. Everything about this is indicating that the sellers are really ramping up, and the reason I'm zooming in here is to illustrate, look at what's going on with volume as well. As we start breaking down, it's not like volume is decreasing. Volume is actually ramping higher, giving you more confidence in the breakdown instead of less. This likely is not going to be a fake breakdown on some substantial volume like we're seeing down below. Now, if there is going to be some upside, if we ultimately don't resist at the 38.2 and we do move higher, what's it going to be all about? Well, quite simply put, it's all about the breakdown point here around, let's go ahead and just throw an official level on so I'm not really guessing for you guys. Not too confident in the eyeball calibration today. That level is going to be at 42.63, right? So anything that gets to that area, that's really where you're going to reevaluate the chart. If the chart's going to flip bullish, we'll recapture that area. If that happens, we know that there's a breakout point, a pressure cooker top on the daily up around 45 even. Again, it doesn't look like a likely scenario, but I do want to cover all of them given the wild nature of the market, right? The broad market was up on Monday. It was down on today's session. Who knows what it will do tomorrow? It does seem like there's a rotation out of tech, so I wouldn't be surprised if this does continue the breakdown. But once again, just covering all of our bases here, the only way to get bullish on this again is back up and over that 42.63. As of right now, as I've sort of hammered home, the chart does look bearish. We are looking for continuation to the downside. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.